Welcome back to Fast Money. I want to get you up to date on the breaking news that we just brought you. California imposing a statewide curfew from 10 p.m. through 5 a.m. starting this Saturday. We are tracking the very latest coronavirus numbers as cases continue to surge here in the U.S. The 7-day national average of new infections jumping more than 25% since last week. That big spike prompting the CDC to urge all Americans to stay at home this Thanksgiving. We did get some more promising news on the vaccine front. Data out of an Oxford AstraZeneca vaccine trial pointing to a robust immune response in adults. That's on top of promising vaccine news we've gotten in recent days from Pfizer and Moderna. And that's clearly sparking investor interest in the space. New data from Morningstar showing a whopping $1.7 billion flowing into healthcare ETFs in the first 2 weeks of this month, following 3 months of outflows. But our next guest says you may have missed the boat on some of these leading vaccine stocks. Let's bring in Jared Holz, healthcare equity strategist at Jefferies. Jared, great to have you with us. So these companies are saving humanity, and you say you expect softness into this year, into the year end, as well as next year?
Melissa, thanks so much for having me. Yeah, I think there are too many programs. The data is not all that cut and dry across the board. And I think when we go into next year, we're going to be talking about things like logistics, the supply chain, and pricing. I think all those dynamics, pose to be problematic as we think about this broader space next year.
When you say the data isn't cut and dry, are you speaking specifically about the data sets that we've gotten so far from Pfizer as well as Moderna?
Yeah, we've only seen interim results from those trials. We still have safety data to go. I'm fairly confident the safety will wind up being pretty good, but we are looking at these data sets kind of as a checking account or a balance sheet. We're looking at them as a snapshot in time. We're looking at the patient data on an efficacy basis about 1 week to 2 weeks post the second injection. So how these patients, fare down the line longer term, I think there will still be some questions about durability. And in my mind, still too many variables to make a call here that they have to be owned at these prices.
A lot of Americans had listened to that data, Jared, and thought these were going to be the silver bullet, so to speak. Are you saying that data could come out later on, which shows that these vaccines aren't 95% effective?
I think it's totally possible. We're only looking at about 100 patients in each trial, and each of the clinical studies that we're referring to now, the Moderna study and the Pfizer study, have about 30,000 or more patients. So I expect that number to go down. It's still, very efficacious, even if it were 80, 85%. And so I don't think the bar is quite 90% for some of the other trials that have yet to read out. But yes, I think we're talking about numbers that probably do degrade over time, at least a little bit.
Hey, Jared, I'm wondering, are you guys modeling out when you think that this is going to be, or one of these vaccines, or both, or more, are going to be widely commercially available in 2021, and when we get to a point where we view that we have an inoculated population here in the U.S., because obviously we spend a lot of time talking about timetables here, and stimulus is a bridge to the vaccine, but it seems that the market is pricing this much sooner than the likelihood of this being widely available to our population.
I agree. I mean, I look at all of the street models when I kind of, I'm trying to figure out where consensus is, at least on my side of the business, where consensus is for, when the mass production, the mass distribution will occur. And I think most models kind of point to, a first quarter unveiling of, multiple vaccines. And I think the more realistic picture, just based on the fact that the supply chain has really never dealt with something this dramatic, in terms of this many injections ready for the public at these, temperatures. And we're talking about, negative 20, 30 degrees that they're going to have to be stored at least initially. We've really never dealt with anything quite like this. So I think the expectation that this is going to be an early 21 event is probably a little bit too optimistic. I'm fairly confident that as we get into the spring and summer, it's going to be more realistic and obviously more substantial. But early 21, I think, is going to prove out to be a little bit too optimistic here.
I wanted to get quickly, Jared, to the point that you made in your note, which I thought was really interesting. That is the pricing. Right now, a lot of people are baking in $20 to $40 a dose for these companies, but you're expecting that over time, that price comes dramatically down in line with the pricing of other vaccines in the past.
Yeah, definitely. This is one point I don't think investors are paying that much attention to. The flu vaccine that's available to all of us every year goes for about $1 to $2, depending on the manufacturer. That includes the H1N1 vaccine within it. So I'm not really sure, how the government, as the biggest purchaser of these vaccines, at least in 2021 and probably 2022, is going to be able to withstand this type of pressure if companies are really going to charge upwards of $40 per regimen or for the 2 doses of this vaccine. I would think it has to come wildly down over time, and especially as more competitors enter the market. We haven't really seen the full data cut from AstraZeneca. You alluded to that earlier, though. J&J still has data. Novavax, Merck, and Sanofi. These are all major programs, and if they all work, I would think pricing goes way down into next year.
Jared, great to speak with you. Thank you.
You too. Thank you.
Jared Holz of Jefferies. A lot of interesting points. The other one in his note is that he doesn't want to be long stocks in the manufacturing phase. And I think that's an important part too, Tim.
Look, we speak about this all the time. It's almost absurd to think that investors would be making a call on a vaccine play based on the vaccine. We don't know the pricing. We don't know really the progression. We don't know the timeline. We don't know the costs involved. And the things that have been moving stocks in biotech and pharma and healthcare have been more related to regulation, Affordable Care Act, lack thereof, public-private, hospital. I mean, that's the dynamic. And if you want a one-size-fits-all, to me, J&J is the name you go for because they have their pharma exposure. It is trading at I'd say their pharma business is growing higher than some of the others, but it's their medical devices business that's stabilized in the last couple of years, their testing business. J&J's been a kind of a quiet underperformer, and I think a name that should probably perform.
Shepard Smith here. Thanks for watching CNBC on YouTube.